Snowflake beat on its third quarter sales expectations, but forecasts slower product revenue growth for the fourth quarter, and that has put shares of the AI software maker under pressure. You can see it's off by more than 11%. Let's find out if investors are overreacting. Joining me now is Ivana Delevska, founder and CEO of Spear Invest. Ivana, thank you very much for joining us.
Thanks for having me, Roger.
So, are they overreacting?
Well, Roger, they're not really overreacting because if you look at the numbers, we did see deceleration in terms of the product revenue growth quarter over quarter. So while it was still a bit compared to consensus, investors would like to see acceleration for some of these higher multiple stocks. So I wouldn't say it's necessarily an overreaction. We still see upside in Snowflake in the long term. This is not a top pick for us right now because we think that we are ahead of the next wave of infrastructure investments in AI. So you first need to put the infrastructure, and then companies like Snowflake will see the benefit.
And with this, they came up short. Are we hitting a point, though, where it's not realistic to expect them to do even better than what we think they're going to do?
Well, I think in the long run, let's say on a 2 to 3 year basis, I think they're going to significantly exceed analyst expectations, right? The question right now is a lot of these concepts like AI agents are very in early innings. So they need to be gaining broad adoption for companies like Snowflake to benefit. So really the beneficiaries right now are going to be the companies providing the picks and shovels into the build out. And then after we have the infrastructure build out and cost to use are significantly lower, that's where you're going to see Snowflake continue to post outsized beats rather than just coming slightly ahead of consensus.
All right. And what are some of the picks and shovels that you're liking?
Well, we really like the networking space, both on optical cables, electrical cables, basically everything that connects the GPUs. Some examples would be Astera Labs, Credo Technology, Marvell. Marvell and Credo reported earlier this week outstanding results, significant growth, both projected and in the current quarter. So I think this is really where investors should be focused on. And we disclose all of our holdings on our website.
And you mentioned the GPUs. Let's talk a little bit about GPUs, TPUs. I think people were just getting used to one. Now they've added GPU in, and other words, TPU in. What do you like within those, and what are your concerns?
Well, that's been a new debate right now, right? Whether Google's newly introduced TPU will gain market share from NVIDIA. I think it's very important for investors to understand that the TPUs perform really well, but they're optimized for recommenders. So this would be applications like Google's internal recommenders that they use to recommend you ads. So anywhere where that type of model needs to be used, their TPUs will perform very well. So this is why there was news that Meta may be considering trying this. So anywhere where you see recommenders, we see Google making significant inroads. Now, when it comes to general purpose computing, that's where NVIDIA has really the lead because they offer a lot of free libraries and tools that sit on top of the GPUs. So Jensen made a comment that even if their customers give away their GPUs or TPUs for free, NVIDIA would still have an advantage. And this is really what that's referring to.
And do you feel there's room for both, or could we see a point where there maybe is only one winner from this?
Absolutely. We see room for both. We actually see room for multiple players. Amazon with their Trainium chip is also making significant inroads. So I think over time, what's going to happen with this space is that there is going to be application-specific GPUs for some of the large markets. So right now, one example is recommenders, right? But as we go forward, maybe robotics or maybe some of these large end markets that emerge don't need to use general purpose GPUs and run all these unnecessary tasks. They can just run the tasks that they're needed. So that way you can achieve significant cost savings. So we think over time there is going to be room for many players. The market is pretty big. So I think the concerns are overblown at this point.
Okay. Now, and you mentioned earlier about Meta, been a significant underperformer this year. What do you want to see change there?
Well, with Meta, Roger, the key is going to be to see this investment, this massive investment that they're doing, to see it driving results in terms of profits and revenue growth. So every time Meta comes slightly ahead of consensus or in line, given so much money that they're investing, that's going to be disappointing. So this is why when the news came out that they're scaling back on their Metaverse investments or plans, people think that that's a positive for the stock. For us, we would really need to see these investments reflected in results. I think they ultimately will. But again, similar to Snowflake, you first need to put the infrastructure in place before you can see the next wave of benefits of AI.
And what would be results to you? What would you like to see for results?
Well, I think it's going to be significant acceleration in their revenue and profit growth, right? Like they haven't really been posting very strong numbers this year. And this is why you see the stock underperform. If you remember, in 2021, there was all the TikTok discussions and they faced similar headwinds in terms of revenue growth. They were able to turn this around with the first generation of chips like the Hopper, right? So results showed pretty significant improvement. And now we're ahead of the next wave with the Blackwell architecture and maybe even TPUs that they are able to use at a lower cost. So we would like to see if that can reaccelerate revenue growth.
All right, and just before we go, bigger picture for AI heading into 2026. What there fears of it frothy, it being a bubble. What do you feel we're going to see in 2026?
Well, we see a lot of people really scared that this is a bubble. We don't believe that's the case at all. And this is because we do boots on the ground research, talk to companies, and we really have good visibility in how much investment is going to take place over the next 3 years. So I think from investment perspective, valuations don't scream expensive at all. In fact, companies like NVIDIA are trading near the low end of a 5-10 year valuation range. So I think it's very important for investors not to miss this next wave of AI investments. Of course, there is always risk and there is always companies that are over-promising and under-delivering. So it's becoming even more important to do fundamental research and pick the right companies. But I think there's significant opportunities ahead. So people should really focus on this space.
Okay, Ivana, thank you as always.